Welcome to Impact, bringing you global developments likely to affect Sri Lanka. This week we cover IMF and China discuss the need to finalise Sri Lanka's debt treatment. Global economy growth rate revised down. US likely to raise interest rates to further curb inflation. India's GDP revised higher by World Bank. Kristalina Georgieva, Managing Director of the International Monetary Fund, and Li Keqiang, the Chinese Premier, discussed the need to reduce the risk of debt crises. Specifically, the talks focused on the need to finalise debt treatments for Zambia and Sri Lanka, which would allow disbursements from the IMF and multilateral development banks. Impact on Sri Lanka. This is a significant positive development for Sri Lanka. Getting China on board any debt restructuring talks has always been challenging for the island nation. Such impetus from the IMF itself, and also last week's Paris Club for a 10-year debt moratorium, will help Sri Lanka towards obtaining an IMF facility early next year. Fitch Ratings cut global economy growth rates again. Releasing its latest Global Economic Outlook report, the rating agency now expects world GDP to grow by 1.4% in 2023, down from its 1.7% estimate in September. It cited central banks around the world intensifying their fight against inflation and a deteriorating outlook for China's property market as reasons. Impact on Sri Lanka. Sri Lanka intends to increase its exports significantly to solve its balance of payment crisis. A slowing global economy will not help this cause. On the plus side, such a slowdown will ease commodity prices, thus reducing Sri Lanka's import bill. On Wednesday, the US Federal Reserve will decide once again on its policy interest rates. As inflation persists and the job market remains tight, analysts are expecting rates to be increased for the sixth consecutive time, albeit at a slower pace than before. While the US dollar, relative to a basket of foreign currencies, has fallen from a 20-year high, a rise in rates is likely to offset recent declines. Impact on Sri Lanka. A rate hike strengthens the US dollar. While this benefits Sri Lanka's exports as an import-dependent country, it would exacerbate the current BOP crisis. Also, the higher rate that US Treasuries now offer will see further capital outflows from emerging markets, such as Sri Lanka. The World Bank revised India's 2022-23 GDP growth forecast upward to 6.9% from the earlier estimate of 6.5%. It noted that the economy has been remarkably resilient to the deteriorating external environment, and strong macroeconomic fundamentals have placed it in good stead compared to other emerging market economies. Impact on Sri Lanka. Accelerated growth in the world's fifth largest economy is a boon to Sri Lankan exports and transshipment volumes. India is Sri Lanka's third largest export market at about $1 billion per annum, but is only roughly 0.1% of its total imports. While India currently accounts for about 65 to 70% of Colombo Port's transshipment volumes. And that's a wrap for this week. Join us next time as we update you of global developments impacting Sri Lanka.